Welcome back to the Beat the Odds of Business Bootcamp. And today we've got Josh. He's in Dubai right now. Say hello, Josh.
Hey, Trevor.
Hey.
It's good to be on the podcast again. Excited to share what we got for the people today about growing your TFSA. Most people are there trapped in these crappy TFSAs, going nowhere.
Mm-hmm.
And I just want to share my personal experience. Not investment advice for everyone, but this will be my personal experience to show what's possible if you think differently about one of the most underused, especially effectively underused, tax efficient vehicles in Canada.
All right. So let's get into it. So today you're going to be sharing your personal stuff about the your TFSA, how you grew your TFSA, talking about some unconventional methods for people, and let's rock and roll. Let's do it.
Yeah. So here I want to kind of set the table for where this, where I was. I started trading stocks in 1998. At that time, I'm 17 years old. I'm 44 years old now. So trading stocks was not new to me. And I started off, trading penny stocks, much the way the degenerate crypto traders start today. So, those guys have a special place in my heart, because I'm sure, if I would have been born in that era, I would have been attracted to that too. So, but of course, I grew as an investor, and actually knowing, holding assets that you would eventually want to hold, what I like to call, for 100 years. Is this an asset that I would want to potentially hold for 100 years,
Mm-hmm.
or have in my family for 100 years? Because we're not going to live 100 years, but hopefully someone in our family will live 100 years. And so that became my investment philosophy. And, I was not really utilizing my TFSA because of the structure that I have. I was doing primarily investments in my corporations that I own. That just made the most tax efficient sense for me at the time. But I'll walk you through kind of where I was, and in my head, because things were changing in the world in right from 2020 until now. Things have gotten drastically different, and I don't think most people actually noticed that they're getting different. And I would suggest most so-called investment advisors, or financial product salesmen, as I like to call them, really weren't thinking critically about what was changing in the world around us. And so I'm going to walk you through where I was, Trevor, and I'm going to share some resources with the viewers
All
here.
right.
So,
Sounds good.
okay, so pulling up here, this is the U.S. gross federal debt to GDP, and I just tell people, it's like, when in doubt, zoom out. Because if you're just looking on a 5-year basis, like, maybe that does not look so discerning to you. But when you zoom out and you start looking at the U.S. federal debt to GDP, and it's like, yeah, this is a lot of Canadians watch this podcast here, but ultimately everything is based, the entire, fiat monetary system that we have is essentially based on the US dollar. Most countries hold US dollars as their reserve asset, or US treasuries. So, and when you start to look at, like, what happened, the government's just entered into rapid spending when COVID broke out. But the thing is it's not like it came from a period of fiscal responsibility. The governments around the world were highly indebted before COVID happened. You can see in 2019, heading into COVID, they're already at 106% of GDP. And then, of course, this just accelerated throughout COVID. And, for perspective, that's the same level of GDP that was occurring, debt to GDP, in World War II. Okay.
Wow.
So I start to see that, and that's on the US side. And that's not just like a little bit concerning. That should be very, very concerning. Okay. You look at the same thing in Canada. And in Canada, we were, we went from, in 2019, at 90% debt to GDP to 118% debt to GDP. Now,
Hmm.
we had a kind of a similar but not quite as bad situation in the 90s. And what happened in the 90s is actually, the liberal Chrétien government actually balanced the budget in the 90s and got us back on a sounder fiscal footing. And that might be surprising because anybody who came out who was to come out with a balanced budget idea today would be seen as some sort of right-wing conspiracy theorist. But believe it or not, that you go back 30 years, that would have been a liberal government. So that's how far the political spectrum has moved in that length of time. Okay, and so what you start to see is these huge levels of debt. But it's not just the level of debt that was concerning, it was the deficit each year. So, what happened is, like, you can see in the US is all of a sudden they're clicking along at a deficit to GDP of, call it 3 or 4%, okay, heading into COVID. And then they went, even in 2019, they're at 4.6%. So they're already at 4.6%. And then they just went hypernova, where it's, their deficit, in relation to GDP was 14%. We're talking spending the same amount, your expenses are exceeding your revenue by the same percentage of GDP as you did in World War II. We had, like, blown past any reasonable metric that was available. But I saw all of the advisors around me, and they just weren't changing their course at all. And it's not something. I'm actually a very boring investor. When I started out, trading penny stocks, I learned that that's not the real way to build actual significant wealth, and certainly not on a risk-adjusted rate of return. And, the predictability, the probability that you're going to generate wealth on a consistent basis like that is not high. But at the same time, when I start looking at these numbers, these are absolutely crazy numbers. Okay, it's the same thing in Canada. We had an immense level, like our deficit was 14.8% of GDP. Okay, and coming out of it, what had to happen didn't happen. Like, what had to happen was basically, this was the point where, someone on the ship, in my mind, as I keep telling people, should have yelled, iceberg straight ahead. And it should have been massive, massive austerity that happened after, the initial lockdowns in 2020 and early 2021. Whether you think the lockdowns should or shouldn't have happened, that's a totally separate discussion. But the discussion is, once they did happen, you had to pay the price for what these costs were. And these costs were immense, but it didn't happen. And we saw the absolute explosion of the M2 money supply. Okay, you had the US going from, call it $15 trillion in circulation to 22 trillion in circulation, in a matter of months. Okay. And it was very, very similar in Canada. It's very, very similar in Canada, where heading into COVID, we had let's call it 1.8 trillion in circulation. And then now today we have $2.7 trillion in circulation. That's $900 billion in the money supply added. And, I was looking around at this, and it was just incredibly disconcerting. And I just saw this level of acceptance from people, where it's just like they thought it was business as normal, and it should have been very, very obvious to people that it was not business as normal. Okay, and I start to look around, and it's like, where is mine and most of my clients' exposure?
Right.
It's like, mine and most of my clients' exposure is in Canadian real estate and North American equities or bonds. Like, most of the exposure for myself and most of my clients is that's where it is, right? And I started to see that as an issue. And so, we could see that at this point, I believed we all needed some insurance. And I saw that, the financial community as a whole was really just not looking for that level of insurance for different exposures. And I first went down the initial path of I'm going to start, looking at acquiring foreign assets. So foreign real estate, potentially foreign stocks for my clients, okay, either through foreign corporations or foreign trusts. And originally we bounced around a couple different ideas. Originally we thought about Bermuda, and then we arrived on the Cayman Islands. And the 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 story was this: like I was in the Cayman Islands, and so I actually was in the Cayman Islands early in January of 2022. And so in January 2022, I'm in the Cayman Islands. And this is the same time that all of the sanctions were coming down on the Russian oligarchs. And I'm sitting in the Cayman Islands at a lawyer's office. And I have a offer on a property in the Cayman Islands that I'm looking to acquire because, like, I need some, I need some or risk diversification against this, giant time bomb that we're all sitting on, which is the explosion of the money supply and the devaluation of our currency. And I'm looking at, like, how do I diversify this risk away from any one country, and how do I help my clients to preserve assets? So I'm sitting there in this office with this lawyer, and I have this offer outstanding. We're talking about different structures, corporate structures and trust structures. And I see in the other office that they were opening the books for all of the trusts they had set up on these Russian oligarchs. And it was at that moment that I realized that these foreign trusts are nothing more than just pieces of paper. At the end of the day, these foreign trusts, they're just pieces of paper. If the government wanted the money, wanted the assets, they were going to pierce the veil of these trusts and get the assets. Because at the end of the day, it was just a piece of paper held by a fiduciary who, in their own self-interest, when the government came knocking, they were going to rip up the piece of paper and give them the asset.
Yeah. So was that when you started looking into Bitcoin? Is that kind of where it was, or were you already looking at Bitcoin before that? Because I know we had the conversation. You said, it doesn't matter where we go, Trev. Like, they're going to get us anywhere we go. Yeah. We got to play a game of whack-a-mole here.
Start looking at, you start looking around at what different assets there, at what different assets that there are, and just give people kind of an understanding of how the financial system works. Like, where is the money and wealth around the world? And this graph here, the total wealth graph, is essentially like where the money and wealth is around the world. I'm sure you'll find maybe different sources with slightly different information, but it's a pretty good breakup. There's about 900 trillion American dollars of wealth assets in the world. The biggest asset class is real estate, $330 trillion of real estate. The second biggest asset is bonds. There's $300 trillion of bonds. There's about $120 trillion of cash. And the equity markets is proportionally smaller at about 115 trillion, art at 18 trillion, gold at 16 trillion. And then you have Bitcoin at 2 trillion. Okay. Very, very small at that time. Okay. And I started looking very seriously at gold and Bitcoin at that time. And then I resolved in, I believe it was April or May of 2022 to start buying Bitcoin. Now, I actually had resolved to start buying both gold and Bitcoin at that point. And at this point, this is an insurance policy for me. Now, I'm not one of these degenerate traders. I'm an experienced investor. So when I start looking around at assets, it's like I'm not going to put a whole bunch of capital at once. I'm going to dollar cost average for a predictable period of time. Okay. And so when I looked at Bitcoin, I at that point in 2022, I start buying, some gold every month, some physical gold every month, and I start buying physical Bitcoin. Okay. So not paper Bitcoin, not an ETF. I'm buying actual Bitcoin and sticking it on a hard wallet. And I'm dollar cost averaging responsibly over time. And at that time, we're talking May of 2022, Terra Luna had just blown up. So the entire crypto market was, entering into crypto winter. And to me, as an experienced investor, it's like I'm the opposite. Like there's always that there's always that meme of like, when the price is high, everybody lines up to buy it, but when the price is low, it's like nobody's there to buy it. It's like when Bitcoin got hammered, it's like I start to be like, I think I should take a look at this right now. It's like, this seems to suit the problem that I'm trying to solve. Is I need some diversification against this system, and it seems to be entering into a period where it's no longer overheated. Okay. And, people will say, they're bubbles. It's like, no, bubbles in history are assets that go up, they go down, and they either crash entirely or they mean revert to their inflation adjusted value. Okay. But that's not Bitcoin. Okay. That's not, Amazon. That's not Tesla. That's not, any main asset class. It's like the true asset classes that are not bubbles. They go up, they correct, and then they continue to go up again. Okay. And that had been Bitcoin. And so when Bitcoin, starts to crash in 2022, I knew this was par for the course for Bitcoin. And I knew that this starts to be actually a good buying opportunity. And so in 2022, I start dollar cost averaging into Bitcoin in May of 2022. I'm buying both gold and Bitcoin to diversify away from this system. Okay. And I continue to do that all throughout, what people call the crypto winter. And the crypto winter was, you saw Sam Bankman-Fried and FTX blowing up, and of course it went down further. So I started buying, physical Bitcoin at about $40,000 Canadian, 40,000 Canadian in Bitcoin. Okay. Yeah. And then I'm buying it all the way down to $20,000 of Bitcoin. Now, I didn't change my investment thesis just because it continued to go down. I'm actually more excited to buy it because I'm buying at a better price. I was willing to buy at $40,000 of Bitcoin. Now it's on sale for 20. I was like, I think it's worth more than that. And at the time, I had a Bitcoin, a Bitcoin valuation, a projection of where I think it's going to go based on the overall supply of money, and then based on the overall supply of gold and how much, of that market capitalization that I think Bitcoin can capture. And I've been sharing that with people, at our boot camps for years. It's the same projection that I had in 2022. And, some people thought I was crazy when I put that projection up, but I gave people, this is my bear case, and this is my base case, and this is my bull case. This is probably the range with 80% certainty. It's going to come, in between those two goalposts, and 10% certainty it does worse than that, and 10% certainty I might even do better than that. But with 80% certainty, it's going to be in this range, and that's going to be attractive rate of return. And I know, so I'm dollar cost averaging into Bitcoin from approximately, May of 2022 until, something started to change in about May of 2023. In May of 2023, what happened is Larry Fink and BlackRock came out and announced that all of a sudden they changed their mind on Bitcoin. And when I tell people that, it's like, oh, who's Larry Fink? It's like, BlackRock is the largest asset manager on planet Earth. When Larry Fink says something, when he does a complete 180 on something, you should listen. He's more important than Sally down at the Royal Bank or Jim down at TD. Those people are just salespeople. They get their marching orders from above. And you start looking at the corporate web of, who owns who in the financial space. You start to see this very interconnected space with, a lot of roads leading back to Vanguard, but BlackRock is the largest asset manager on planet Earth. So Larry Fink comes out and says that, we want a Bitcoin ETF. And at that time, I believe, we already had a Bitcoin ETF in Canada. There was no Bitcoin ETF in the US. And some people will say it was over at that moment. The minute Larry Fink said that they're coming in, I think BlackRock at that time had applied for 524 ETFs in the history of BlackRock and had been approved 523 times. Basically, it was like the equivalent of Mariano Rivera coming out of the bullpen with like a 6-run lead. Yeah. It's like this thing is locked down, right?
I remember those days when we were having conversations about it, and you were like showing me like what's happening, and then after that, when the Fed was kind of fighting against Bitcoin and against these ETFs, But then, the timeline came up and they didn't renew their suit against it, right? So I mean, the ETF basically was approved at that time. It was awesome.
That's right. So when Larry Fink did this, and like this is what I'm actually researching. So when people are just like, you've memed into something and like it worked out for you, it's like, no, I've been, trading stocks for, trading stocks for 27 years at this point in time. I didn't meme into anything. I dollar cost averaged something because it was a very viable problem that was there. I didn't get lucky, didn't ape into anything. And then Larry Fink makes this announcement. But at the same time, Larry Fink's making that announcement, there was litigation where Grayscale, they wanted to convert their Bitcoin trust to a spot Bitcoin ETF, and they've been rejected by the U.S. Securities and Exchange Commission, and they sued them. Okay, they sued them. They had open litigation, and I believe that case was argued in March of 2023, if memory serves. And then what happened August 29th? They argue their case. Grayscale argues their case against the U.S. Securities Exchange Commission in March. And in May of 2023, Larry Fink of BlackRock does a complete 180. He had said Bitcoin is for money launderers, and all of a sudden he says it's going to be the next global store of value. Does a complete 180 and said we're going to pursue a Bitcoin ETF. And then in August of 2023, what happened is the courts ruled in favor of Grayscale against the U.S. Securities and Exchange Commission. And they said that the reasons that the U.S. Securities and Exchange Commission had not approved the ETF were, capricious and arbitrary. Like, it was a scathing ruling. Like, we were reading the ruling word for word in our office, and we read it at the boot camp for people that were there, and it was a scathing ruling. But the fine print on the ruling is it was just one ruling. The U.S. Securities and Exchange Commission had 45 days from the date of that ruling to basically submit additional information and to essentially appeal the ruling. And so that was August 29 of 2023. Okay. And so that brings us to October of 2023, October 13th, to be precisely, of 2023. That's 45 days from the ruling from the Grayscale case. And lo and behold, the U.S. Securities and Exchange Commission did not appeal the case. Okay, so even though the U.S. Bitcoin ETF did not get launched until January of 2024, it was a done deal on October 13th of 2023. Anybody who was actually following it, I don't mean like posting memes or thinking hypothesis, but anybody who was actually reading the fine print, it's like it was a done deal. Like, there was no way out at this point. Like, if the U.S. Securities and Exchange Commission, like, if they would have tried to reject it at the 11th hour, like, I think they would be like probably potentially facing like personal lawsuits because like, the courts had already ruled that all the reasons that they had given previously were discriminatory, capricious, arbitrary. Like, the ruling was as scathing as scathing can be, and they had a time period to object, and they just didn't do it. They let the time period lapse. And so in October of 2023, I think you remember, Trevor, me coming to you and saying, like, I'm going all in. Like, and
I do remember.
I'm betting big. Not all in, but like I'm betting big. Okay?
Yeah, like, because at that time, like we were trying to figure out, like, what is going to be happening with this, and then once that happened, and the U.S. finally capitulated, and the ETF was on deck. Like, that was the trigger. That was the signal that, oh my gosh, this is actually being taken as a real asset class by big banks, by big funds, by BlackRock, by Vanguard, by Fidelity, State Street. Like, all these companies are going to start bringing these on board. And it was like, it has nowhere to go but up, because they can't cancel it. They can't stop it. They can't say, oh, put billions and billions of dollars onto their balance sheet and then, outlawed. That is just not going to happen, right? So yeah, continue on the story. This is exciting. This is really cool.
Yeah, and so, like, although the U.S. doesn't, in my mind, they're getting an ETF. They just the the world has not caught up to this decision yet. They're about to get the largest capital market in the world is about to get an ETF. But in Canada, we already have a Bitcoin ETF. And we'd had a couple of Bitcoin ETFs for years, and they're both TFSA and RRSP eligible. And so on that day, like I hadn't actually utilize my TFSA. So, at that time, because I'm investing for various tax reasons in corporate structures that I have. So the majority of my portfolio that I have is held in corporate accounts. Okay. But simultaneously in September of 2023, I just sold some of the shares in my firm. So I have some personal cash, sitting there, and I was waiting to deploy. And I get this news in October, and I'm just like, yeah, it makes sense for me with the risk reward that's going to be here. I could use it to offset a bit of personal tax, but I hedge my bets a little bit, and I'm going to use my tax-free savings account. Okay. And so, the tax-free savings account that I had open, I think I had, $1,000 in it, bought some boring like Sun Life shares or something. And maybe I'm up like $200 or $300 or something like that. I liquidate that and I contribute the entire lifetime limit at that time, which is $88,000 into my TFSA. And I go, all in on that. And I want to show people, because I want to, like, some people will say that they're in on things, but kind of you put your money where your mouth is type of thing. And I got a screenshot here from people. Okay, so might be the most comical of TFSA screenshots that you're going to see here, but this is my personal TFSA at BMO, and I'm all in on BTC.B. non-currency hedge. I want the US dollar exposure. And so in March of 2023, I'm all in my entire $88,000 limit. Maybe I got $200 or $300 of gains in there. And so October 13th of 2023, all into BTCC.B. And then of course it rolls over in January, I get another $7,000 worth of limit. I buy it again. And then just for some fun and some giggles in January 2025, when I got my new limit, I diversified a little bit and bought some MicroStrategy. So then $7,000 in 2025 went into MicroStrategy. And so there it is. There's my screen receipt at 417,000. And that is my TFSA. So if anyone wants to doubt it, I brought the receipt that was there. And so it's funny, but at the moment I did that, it's like that wasn't the only money that I put into Bitcoin at that time. I bought more actual physical Bitcoin in addition to the stuff that I've been dollar cost averaging in. And oddly enough, when I bought the additional physical Bitcoin, what happened is like I actually got my accounts frozen. Because I got my accounts frozen and I had to go on this long chase of like, you transferred this money from your account to a Bitcoin exchange and you bought physical Bitcoin and now you're trying to transfer it off the exchange. And they were convinced that I was being kidnapped or my accounts had been hacked or they weren't talking to the right person. And this went on for days. And it was funny. It's like, this is, it kind of just reinforced the whole thing. It's like, this is why the Bitcoin ETF is going to work is because in order to deploy significant amounts of capital, it's still difficult. It's still difficult through exchanges. Okay.
Yeah.
And so, if you're a billionaire, the hassle that you're going to get of trying to buy, tens of thousands or hundreds of thousands of dollars worth of Bitcoin, it's like, it's just not even worth it. Right. So it's like, whereas
FinTrack, FinTrack,
I didn't have any trouble at all buying $88,000 in my TFSA. It was no problem. It was smooth sailing. Right. So.
Yeah, right now in Canada, they're all worried about money laundering, the anti-money laundering, and it's a big deal right now. So anything going through FinTrack, anything is all being tracked. So they're really keeping an eye on it. Just ask me. I'm a mortgage broker. They're really falling down on that. So if somebody wants to invest, say, $100,000 or $200,000 or $1 million in Bitcoin, good luck. Good luck with that.
It's actually tough. It's actually tough to do. That's not impossible, but it's harder than you think it should be. And that's the point where, that's why Bitcoin wins in the end, because if it was our money, well, why do I need someone's permission to use it all the time? So how many of us have ever had something frozen and had to get some, no-name person at a bank or financial institution to unblock your account again? Of course, this happens, right? And so that's my kind of my journey from $0 of a TFSA, which is kind of unique because most people are who have a $0 TFSA don't all of a sudden have 88,000 overnight to retop it up. But like your TFSA is a very, very powerful account, and one respect is like you should use it for your high risk, high reward type investments. Because the tax advantage is phenomenal because that's completely tax-free money at that point. On the downside of that is that um, it's a very valuable investment tool. And if you blow it, which I've had a lot of people that I've seen over the years, and they have some crazy hot stock tip where they're all going to get rich off of weed stocks. It's like if I've seen where they just pile into things that to me don't make any sense. It's like there's very few can't miss things that happen. Like there's just very few things. I've been like trading stocks for 20, 26, 27 years at this point. And what are the things in my lifetime where looking back on it, we all should do it. Most of it was just market timing. Like most of it was just market timing. There was the dot-com bubble in 2001 where, that was the future. It was just overheated at that time. There was the financial crisis of 2008 and 2009. There was the kind of the COVID crash, if you will, of 2020, where those were major buying opportunities. But this was akin to that. This was probably the fourth, of that, where we're looking at debt to GDP ratios, because the gold bugs have been sounding this horn for years, but they were just early. Like they were early. There was no reason. Even 10 years ago, I didn't have any reason to buy any gold. Even 7 years ago, I didn't have any reason to buy any gold because the debt to GDP was, not where I wanted it to be, but it was still serviceable. You had deficits that were hovering around the growth rate of the economy. You had debts that were within the historical parameters. But we basically, in 2020, we blew through all of the financial goalposts out there. And unfortunately, some people just said, well, these gold bugs have been saying this for years and it never turned out. It's like, yeah, they've been sounding an alarm, but mathematically they weren't correct. But it was like kind of the boy who cried wolf. It's like all of a sudden the wolf was actually there at this point. The wolf was actually there. The debt to GDP was well over 100%. The deficits were not close at all. The money supply had exploded to beyond levels that we'd seen before, and no one was around there looking for insurance except for who was looking for insurance. It's like it seemed like it was myself and Larry Fink were out there looking, maybe some other people. And so when I invested that, it's like that was a long road. That was a 26 or 27 year road where it's like most people they get interested in crypto, but they have no experience in actually trading stocks. It's like so even when I start buying crypto, it's like I start dollar cost averaging in at 40,000, and I have no problem at 20. To me, that's par for the course. I knew exactly what I was buying. I knew how long of a time horizon I had. I'm buying this for 10 years. It's like just because the price is cut in half, I'm just more excited to keep dollar cost averaging in. I'm going to get more than what I thought, right?
Yeah.
And then when in 2023, basically the largest asset manager on planet Earth and the US court system said the rules are about to change. And you had a head start from October to January. Everyone had a head start. So anybody who got in kind of before 2024, congratulations. And it's just the resolve too. You have to understand. It's like, if I would have put that $88,000 in and it went down to 44,000, it's like, I knew where I was going with that. Right. And so it's important. I'm not advocating for anybody to have a 100% position in Bitcoin. I don't have a 100% position in Bitcoin. I'm a firm believer that people need, the ideal portfolio has, private companies, real estate, dividend paying stocks, gold and Bitcoin. And I really think that's it. And it's just in my particular circumstance, it made sense to deploy a significant portion of what I had allocated to Bitcoin within my TFSA. It just made sense at that time with my, tax strategy at that time. And so it ends up being a bit of an extreme example, but it shows you what's possible in a TFSA. And hopefully that's kind of helpful for someone, because I think there's a lot of advisors out there that they're not really advisors. They're just salespeople. They're just selling whatever's on the product list, whatever 2%. And it's like, and I see that it's like, why was anybody buying bonds in that time? It's like, there was no way, there was no way you can get a positive real rate of return with that debt level. And so, the advisors who weren't educating their clients about that at that time, and I see, people are having 40% of their portfolio allocated to bonds, and it's just like, and 0% allocated to gold and Bitcoin, despite those macroeconomic conditions. And it's just like, there is no advisory services. I realize that they're just not getting any sort of advice at all, that these people are not thinking critically, that this was simply akin to people sitting around. These are people wearing a mask in their car by themselves, or wearing a mask on Zoom calls. Like, it was just mass stupidity in the financial world when there was very, very real fiscal warning signs that capital is going to start fleeing to other asset classes. And, Bitcoin and gold have been the benefactor. And I didn't own any before then. And that's why I started to look. And it wasn't the first place I looked. I looked offshore. Like I said, I was sitting in the Cayman Islands. And, I had to go through that experience, seeing the Russian oligarchs having their trusts, the assets in their trust, confiscated right from the lawyer's office. And I realized, like, this is not an asset that you own. It's only the assets that you can have self-custody of. It's only gold and Bitcoin. Like, those are pretty much the only assets that you can really have self-custody of. We have a piece of property, but you have a piece of property that you basically rent from the government through property taxes.
Yeah.
In most places in Canada, and in a lot of other places in Canada, you can't even sell it without one party paying a property transfer tax. And so, what's outside of that sort of system is right now it's Bitcoin and gold, and that's why you've seen the capital flow into those assets for the last 5 years. It's like, that's not me and my clients making decisions like that. That's the big institutional money that they had the exact same concerns that I had, and that's why the capital starts flowing in that direction.
Yeah, and right now, I mean, I don't see anything changing regarding the money supply. They're going to be printing more money, going to be devaluing the dollar even more, both the Canadian dollar and the U.S. currency. Looks like they're making a more of a push towards approving Bitcoin, making Bitcoin available, protecting it, possibly starting up a Bitcoin reserve in the United States. There's talks of things here in Canada as well. So, I mean, like, the writing's on the wall as far as I'm concerned. And, people need to, switch where they are allocating resources to, and really paying attention to what's going on, because the fiat money system is failing and it's collapsing, and we're watching it in real time. So, it's time to get repaired.
Yeah, I tell people, you got to get off zero. You just got to get off zero. Private businesses are kind of a little tricky, but for the average Canadian, real estate, often that's at least the place that you live in. Dividend paying stocks, gold and Bitcoin, it's like that's where I'm looking at the proportion, and how you use debt to acquire them more efficiently is very, very important. And so that there are ways to do this, people. And even for the average Canadian who doesn't have the same capital to deploy, every dollar that you do have to deploy, it will probably work better because of the expansion of the money supply, that the amount of capital that's going to go into hard assets, it's like the wealth is going to get disproportionately moved from the people who do the work to the people who own the assets. So if you know that, even if you have small amounts of capital, that small amounts of capital getting deployed is probably going to have a higher rate of return than it would have, say, 25 years ago. And so that's kind of what we have today. At the next boot camp, we're going to be teaching some more advanced moves on the TFSA. But Trevor and
Mm-hmm.
me and you have been working on that lately. So,
Yeah.
that's kind of a chapter 2 on that. And I guarantee you that's, what we're going to be sharing on that on the bootcamp is not stuff that you're getting at your bank advisor, because it's currently not available. What we're going to be sharing at the major Canadian banks. So on what you can do inside of that TFSA, and it's going to be kind of the same thing that probably me and you are doing, Trevor, right?
Yeah.
So
Yeah.
it's kind of
Absolutely.
one of those things. It's like it's not. We're just sharing the things that we've been successful at
Yeah.
because I like I said I've been I'm a fractional CFO and I've been managing my own money and being the CFO for companies who have corporate treasuries for years. And it's like there's a reason why I'm not using any bank advisors. It's because of beating the rate of return for years at this point. So it's the banks are set up primarily to for the benefit of the banks, and
Mm-hmm.
so it's important for people to actually understand money better so they can build a portfolio that's set up for them and their family. And that would be more important for most people. So
Yeah, absolutely. Yeah, people got to remember a bank is a business, and the bank's interest is the bank. They want to make money for themselves and for their shareholders. They're not in it for you. They don't like you. They take your money. They take you for granted, and they raise the rates all the time. I've never seen one quarter where a bank had a loss. They're making record profits every single year, and like you said, they're government protected monopolies in Canada. So I'm happily becoming a part owner in a number of banks in Canada because they're not going to fail.
that's right.
So
I'm happy to collect that
yeah,
dividend. I'm just not going to buy the products that they're trying, the investment
that's right.
products that they're
That's
selling.
right.
So
Yeah.
if some other people, not our clients, not our viewers, but if some other people want to buy those, that's great because I need that to keep collecting my dividends on those stocks every month. But I'm not buying any of those products. I'm buying the shares in those banks because it's pretty much impossible for those banks to get a higher rate of return for their investors than for their clients than their shareholders. So
That's right.
that's what I have for everyone today. Like I said, if you want to learn the more advanced strategies that we're going to be doing with our TFSAs in the future, that's going to be coming up at the next boot camp. And I hope this is helpful for someone out there, that it shows you what's actually possible in your TFSA. And there's probably so much more possible than you've been told by the advisors that you're using.
All right. Thanks, Josh. We'll see you next time.
See ya.